Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome day trading today. You can see my portfolio up top in the red, a little bit of a pullback from the last several days, down $244.15, representing 0.77% of my overall portfolio. This is in line with all three major indices. Each one had a little bit of a pullback, not quite as severe as 0.77%, but all definitely in the red today. S&P 500 down 0.25%, NASDAQ down 0.23%, and the Dow 30 down almost 33 points, 0.16%. As I scroll through my portfolio, you can see a lot of red scattered throughout my portfolio. No one market sector survived this little bit of a pullback here. Of note, my Ford pulled back 1.1%. That's my largest holding, actually. It's going to say one of my largest, but it is by far my largest holding in my portfolio. You can see a little bit of uptick in KMB HSY, consumer discretionary, but for the most part, that sector was down as well. Financials down, technology, a few stocks there in the green, Apple, AMD, and Microsoft, but they're not very far in the green, 0.09, 0.05%. AMD did quite well today, 0.52%. And as I scroll to the bottom, some of my closed-end funds did pretty good today. Up 1.26% for PCM, 1.68% for PSEC, and then a few penny stocks on the bottom there in the red, but I hardly have any capital invested in those particular stocks. What I wanted to touch on today is a discussion I kind of alluded to yesterday, capital gains. So as you remember, yesterday I put out a video describing the difference between ordinary and qualified dividends and the tax implications between each of those different categories. The same holds true for capital gains, a little bit different way. So for the dividends, you had to hold the stock for 60 days in a 121-day period, starting 60 days anterior to the ex-dividend date. For capital gains, there's a time period, but it's much longer. So a stock needs to be held for greater than a year before selling. So let's say, for example, I went ahead and bought this particular ETF here, this Vanguard fund, this high dividend yield ETF. So if I were to buy that today, I would essentially have to wait through December 21st of 2017 before selling. And if I did that, I would be qualified for long-term capital gains. If I sold anytime before that period, it'd be short-term capital gains. And as I talked about yesterday, there's big tax implications between short-term and long-term capital gains. So depending on what tax bracket you fall into, for example, let's say you fell into the lower tax brackets, the 10 and 15% income tax bracket. A short-term capital gains would simply be your income tax rate, 10 or 15%, but long-term capital gains would be 0 for the 10 and 15% tax brackets. If you fell into the 25% tax bracket, actually, let's just say you fell into anywhere from the 25, 28, 33, or 35% tax brackets. If you paid short-term capital gains, you'd be paying those same tax brackets, 25, 28, 33, or 35% of whatever gains you made. So if you bought a stock for 100, sold it for 200, you make $100. If you fell into the 25% tax bracket, you'd have to pay $25 back. If you fell into 35, you'd have to pay $35. However, if those capital gains were qualified as long-term capital gains, you'd only be paying 15% no matter which category you fell into, whether it was the 25, the 28, the 33, or 35. So if you fell into the 25% tax bracket, income tax bracket, you'd save $10, paying 15 instead of 25. If you fell into the 35% income tax bracket, you'd be paying 15 instead of 35, a savings of 20%. Which is a lot of money if you think about it. In 1 year, if you had a let's say a 10% annual percentage rate on your investments, that's pretty good. You just saved you saved 20% if you fell into a 35% tax bracket. You save 10% if you fell into a 25% tax bracket. So right there, you are essentially making a very good yearly gain just on that savings of tax. So you can see the huge implications, the very good implications for holding stocks long term. So that's why a lot of investors like the buy and hold strategy, not just because it takes away a little bit of the variability in the market, but also because you have these huge tax savings. saving 10% to 20%, I mean, that's a good year's gains right there. So if you were to hold, for example, I've been doing a lot of swing trading with Ford. So if I were to buy and sell Ford repeatedly and make $1,000, I would have to essentially pay short-term capital gains rate. So I'd maybe have to pay 35% of that. But if I simply held that stock through the end of the year and sold it, made $1,000, I'd be paying 15% of that back. So I'd be essentially be making an extra 20% through that savings, sort of an opportunity savings there. So yeah, just keep those in mind when you're thinking about selling a stock. If you are selling a stock anywhere close to a year, I would simply wait that extra few months or few days, whatever that takes, so you can get qualified for long-term capital gains. That definitely is in play with my portfolio. A lot of stocks I'm simply going to be holding for the long term. Ford, I know I've been doing a lot of day and swing trades with Ford, but for the most part, the bulk of my shares I'm holding long term. I'll never simply just sell those off to buy those back on a day or swing trade. I'm going to be keeping those for the long term, probably 5+ years. I love the stock. I think U.S. automotive is going to really take off this next 4 years under the new administration, cutting back some regulations and hopefully not starting any trade wars with other companies that would severely affect these companies. It's kind of a risky play, to be honest, but I like it moving forward. It's got a great dividend yield. All U.S. automakers, including Tesla, which does not have a dividend yield, which I kind of shy away from those stocks, but I think even Tesla is going to be a very, very good play moving forward the next 4-8 years or beyond. So yeah, just kind of wanted to update you guys on my portfolio, talk a little bit about short-term versus long-term capital gains. Hopefully you guys had a little bit better day than I did today. Let me know how you guys did. Any big plays coming up, what you guys are doing, wrapping up the end of the year here for tax purposes. So yeah, I'll kind of end the video with that. As always, if you enjoy my videos, feel free to like, share, and subscribe. If you have any good learning points, let us know. I hope you guys have, or at least I hope you guys have been learning a little bit from my videos. I've definitely been learning a ton from your commentaries and some of your suggestions. So I thank you guys very much for that. And kind of with that sentiment, I'll end the video and I'll see you guys tomorrow.